Holy moly, donut shop. We're spilling on the S&P over to lows. Morning trade pros. Welcome to Morning Market Update for this beautiful April 30th of 2020. This is George Fabsov, Trade Pro Academy. I don't know about you guys, but I feel like time's flying. All right. There's currently an ongoing press conference by European Central Bank head Christine Lagarde. She was the former IMF, the International Monetary Fund head. So she's speaking at the moment. You have to know that. All right. The conference is rolling. She's saying a lot of things. It's going to be hard to break it all down in 10 minutes. But we will do it in the trading room, okay, as we go through the day. What you need to know is, though, that the market's not taking it very well, and there's a few other reasons. So let's talk about it. Yesterday, Jerome Powell at 2 p.m., all right, had a announcement. So we didn't expect interest rates to be shifted or any of the policies. So it was pretty neutral. We didn't have high expectations for this event. But then throughout the press conference, he talked up a few things that I think the market didn't realize and priced into the upside, right? So here's what he said. He put an uncharacteristically blunt call, as Bloomberg says it, and I liked it, for Congress and the White House to spend even more money, all right? He said that to prevent deeper economic damage for the coronavirus pandemic. Jerome Powell is more worried at this point than the White House, which is completely a 180 from what it used to be. Remember, Powell's like, we don't have to panic too much. And Trump's like, cut the rates. And Powell's like, no, I ain't doing it. And now it's kind of gone the other way. So you got to kind of think, what has happened behind the scenes to warrant this level of worry from Jerome Powell? The market was caught off guard by that. And you would think, look, that's bad for the equity market. It's bad for the economy. The stock market is not the economy. And if you're trading the stock market like it's the economy, you're probably not winning. I couldn't imagine how you could be positive with that approach. Okay, they're completely disconnected at this point, and you just have to understand that and roll with it. All right, so this is good news for the stock market, bad news for the economy. But the thing about the economy is it's not now. The economic can be kicked down the road, and it has been kicked down the road ever since splitting off from the gold standard. It's a debt-based economic system. Okay, it's not a surprise. It's fact. So Jerome Powell goes and says that, and he says this is the part that blows my mind. He says, now is not the time to worry about debt. That's what he said, 100%. And further said, I can print as much money as needed. He also said, he followed up, the printing press is in my basement during the stay-at-home order. It was all real. I'm just kidding. Those last two are fake news. I really thought it would make a good joke. And if somebody out there is laughing, then perfect. He didn't say that. He didn't say he can print as much money or that he's got the printing press in the basement during the isolation or stay-at-home order. But he did say that now's the time to not worry about debt. Okay, bring it on. We need more. So that was odd. Market took that as a bullish sign into the afternoon and rallied. But now let's flip to today. Today's a whole different day. In the stock market, every day is a brand new session for day traders especially. You can't predict what is going to happen tomorrow based on the context of today. You have today, and that's all you got. And even further that in today, you have this very moment, and that's all you got. All right. A lot of downside through month-end rebalancing. Let's look at what's happened in the past month because we are closing out. This is the last day of April. Okay. Equities have had one heck of a month of April. They're up 14% on the S&P 500 alone just in April. Okay. Bonds in the same period are only up 0.93%. All right. That's a 30-year bond, the ZB quote. Okay. So what does a fund have to do that promised investors 50% equity, 50% bonds? Remember, institutional traders and big funds, especially the money managers, aren't there to take risk with the capital. They're there to deliver on the promise that's been sold to the client. The client's been sold half your portfolios in equities, half is in bonds. You want to be balanced. Equities might be the greatest play in the world for the next 5 years, but they got to restore the balance. So what they got to do is sell equities, okay, because they're overweight equities. You could include a sponsor there for some weight loss service. They're overweight equities. This episode brought to you by Boost. I'm just kidding. Okay, so overweight equities and underweight bonds. So they have to sell equity position and buy the bonds position to restore the balance. You're going to see some selling today into the month end. All right. In addition to that, this morning, we actually got a pretty good jobs number. If this jobs or unemployment claims, if this had come out last week, the market would have rallied like crazy. This week, it's the end of the month. It's a whole different ballgame. Ain't no one buying 3.8 million unemployment claims, even though it's good. Let's talk about it. The prior number of unemployment claims was 4.427. All right, yeah, I should have held on to that short, but doing this update got me a little worried. Hang on 1 second. Yeah, sold. Well, bought the last one at 12.5. Whatever. Let's keep going. All right, 4.4 million jobs were filed for unemployment. Okay, and last week, this week 3.839. It's less than the prior week. Normally, that's a good thing. But this morning, the market doesn't care. It's a month-end rebalance. Christine Lagarde is right now yapping, and I'll tell you what she's saying in a moment. Okay, that makes the last 6 weeks, 30 million jobs have been lost in America, which is just under 10% at this point. If you take the 330 million population, but then there's two types of populations. There's a population that you get to meet and say hi to, and then there's a population that works to pay for the other part of the population as well, and their own retirement. All right, that's an enormous number of job losses. Let's move on to the ECB. 7:45, the European Central Bank. Thanks, Lee. Lee thought it was a good joke. All right. 7:45. I'm not gonna be able to cover this in great detail. I will do it in the room just because I think it's gonna help you guys trade, but I can't do it all on YouTube. This is what happened. ECB, European Central Bank, said that they're not doing anything except they're reiterating their willingness to do more. Okay. They're making the conditions for their TLTROs, which is a lending program, more favorable. They launched a new lending program. But the ECB keeps talking about doing more, and not doing it. It's getting a little psychotic. We need to do more. The next ECB meeting comes, slight adjustment to our current policy program. But we need to do more. We're willing to do more. At one point, you start to think either they're using this as a way of, giving their sentiment that, yeah, we're here to do more, providing a relief because the market's being supported, or they can't do more. And that's a scary picture. All right. And so the market's kind of in a little bit of a mood. That's all you need to know on the ECB. There's a lot more depth to this. She's been talking for the last 30 minutes, and the report statement's like 3 pages long. So can't break it all down to you in a 10-minute segment, but you got to read into this. Very important what she's saying. Okay. Key earnings on Wednesday or yesterday. Facebook up 10.5% after hours as their sales stabilized. People were surprised to see the ad revenue come in. Okay, they're not surprised that people are using Facebook, but if people are on Facebook watching cat videos, like LOL cats and all those, so you can tell I haven't been on Facebook lately because that's the thing I get reference of like the most recent memory. Okay, that's up 10.5%. Facebook is. There's a lot of usage, but there's a lot of ads too. Advertisers didn't pull back spending as much as we thought throughout the coronavirus pandemic. All right, Boeing's up 6%. Even though they absolutely whiffed. General Electric's down 3.2. They killed $1 billion of free cash flow. General Electric did, down 3.2. MasterCard beats their estimates, up 7%. Microsoft's up 2.2 after minimal impacts to their COVID-19. All right. Qualcomm's up 2.9%, reporting higher revenue. Spotify's up 11.5% on soaring usage, more paid subscribers. It makes sense, right? People are home, they want to listen to music. Tesla's up 8.7% following a surprise Q1 profit. Now, these companies are coming in with positive earnings. And anyone that's surprised and saying, oh, well, this coronavirus should have killed them. Look, when you have Harvard and you have these big corporations taking bailout, or that's what it is, bailout, loan money from the government, and they don't need it, and the people every day that work for these companies that need it the most, when that's happening, as disgusting as it is, it's going to go up. All right, people are taking money they have no business taking as a loan. There should be some qualifications. In Canada, you need to demonstrate a 70% drop in your revenue in order to file for a 70% subsidy of wages. All right, so if a business drops 70%, you could subsidize 70% of the wages that you pay, but you got to demonstrate that. All right, it's a little bit different, and I think companies taking money just in a desperate time, I think it's way offside. Anywho, just an opinion. That's not a fact. That's an opinion that I have, that it's gross. The fact is they haven't taken money though. Okay, after today's close, Apple, Amazon, Twitter are due out with earnings. They're really 3 big heavy hitters, especially Apple and Amazon. So that's after the bell today. Watch NASDAQ futures. They're probably going to see quite a bit of volatility. In Asia, Japan is up 2.1%. Hong Kong's closed. China up 1.3%. India up 3.1%. In Europe at midday, London's down 0.5%. Paris is up 0.2%. Frankfurt's up 0.1%. All right, and in the U.S., Dow, S&P, NASDAQ all were up, have now shed net gains and are sharply lower. All right. I do think that we're going to start to, as things get lifted, as restrictions get lifted, I do think the economy bounces back. I don't know that we get a new low below what we've already put in. Okay. But if there's a second wave, there's a chance that we start to sell off. Right now, the market's overbought. All right. It needs to pull back. And this end of this month, a rebalance is a great place for that to happen. Okay. Crude oil's up 16% today, up over $17. Gold's up 1%. Bitcoin's up 18.6. I'm starting to look at crude oil after the June contract expires. It's a great opportunity further out for an investment through some option plays. All right, 9:45 this morning, we got Chicago PMI. It used to be important, not as much, but still is. Chicago's the center of the universe for futures trading. 3 p.m. FAR prices, 4:30 money supply and Fed balance sheet. All right, you got a crap ton of data today and a lot of earnings after the bell. Thank you, Lee. I really appreciate that. Lee's impressed. And I'm impressed that you're here every day as well, Lee. I love having you out, having some chats. Thank you for that. It really helps kind of, it helps to get a pat on the back once in a while. I'm just like everyone else. I enjoy a pat on the back. I agree. Advertisers are tighten the purse strings, but you got to remember too that there's a push to go digital. Okay, this is a great time for businesses who have been thinking, and I got to tell you, every single business in the universe has been thinking about what would happen if our employees worked from home. All right, what would happen if we went more digital, went more online? They have these rapid labs, these stupid sticky notes they move on the wall, and it's a whole new management system, if you will. And those businesses could use that as an opportunity. You think, got to remember, if they could reduce costs, that could flow into more advertised spending, more online business, more commerce. But that's longer term. And you're right, the short term, there could be a lagging effect. Depends on how Q2 is, how bad it is. All right. I think during this pandemic, some companies are naturally going to suffer, others won't. And depends on what kind of business you're in. If you're running a bar or a restaurant and you've strapped yourself to the absolute limit for leverage and you can't make it through 1 or 2 months of no sales, those people aren't surprised that they're in trouble. Okay, those are the people that go to bed with the thought in their head, oh my God, I could get in trouble. And, it's unfortunate, but it's an economy. I love you guys. Take care. Have a great rest of your day. Sure, I need a cuddle. Get over here. Not even a hug, a full-on cuddle. Come on, man. Yeah, sure. Yeah, it's legal to not have a Q2 expectation. They're scared that Q2 is going to be horrific. And if you look at leadership and what Jerome Powell is doing too, everyone's trying to push guidance out to Q3, because if you don't have a target for Q2, you don't know what's bad. All right. And everyone's trying to focus on the future. Q3, rebound. Q2 is going to be absolutely ugly. Jerome Powell yesterday said he's probably going to see the largest negative GDP print, largest negative GDP print in the history of the United States in Q2. He said it himself. So we know it's going to look ugly. But in the end of Q2, 1 month later, because remember, GDP is going to come out in July. That's when the next GDP print is going to come out. By July, if everyone's at work, okay, and the economy's restarted, there isn't a second wave of the pandemic, then does it really matter? We already knew that. We've gone through the hard part. That's why GDP is so delayed. It doesn't really matter as much. Okay. Love you guys. Take care. Now I really got to go. I'm not reading any more comments. Damn it. YouTube, take care. Love you all. Appreciate you all. And trading room, let's get going. Steven, let's get started with oil. And let's rock and roll. YouTube, take care. Manage your risk, TRADEPRO. Peace.